Or to provide another insight to the new tax regime on compliance, expectations, and the broader implications for citizens' welfare is Dr. Ben Enamudu. He's the Chairman, Chartered Institute of Taxation of Nigeria, Abuja District. Glad to have you join me.
Thank you for having me. Good evening, Nigerians.
Yeah, I read where it was talked about the 4 key pillars concerning this tax, but I am more interested in the rebalancing the physical social contract, which Dr. has to do with people, you and I, and the person watching out there. How does this affect daily banking transactions, for example? A, who pays what to whom? B, if I have 4 bank accounts, for example, and I transfer money from one account of mine to the other, will I be taxed? If someone transfers money to me or the other way around, will I or the transferee, so to speak, or the receiver be taxed, and how much? I mean, take it one by one. If you didn't get all of them together, I will come with it again.
Yes, thank you very much. I think you've asked multiple questions in one, just like you rightly mentioned. I would try and address them because they are all speaking towards the same direction. All right, so when you mention bank accounts, taxing your bank account, so there are 2 aspects to it. There's the aspect of your income and then the aspect of your transactions. So the narrative out there, which is the wrong narrative, is that the monies in your bank account will be taxed. So there is no provisions for that in our tax laws. Nobody taxes the monies in your bank account. However, there is an introduced stamp duty of 15 naira per transactions. So when you make transfers from your account to someone else, there's a 15 naira stamp duty that applies. However, if you maintain accounts within the same bank, different accounts within the same bank, you are not expected to pay the 15 naira stamp duty. And also, before now, both the sender and the receiver bears the burden of the stamp duty. But with the new tax reform, only the sender pays the 15 naira stamp duty. And also, salary accounts and payment of salary are also exempted from stamp duty. And then transfers below 10,000 naira are also exempted from the stamp duties. So we start speaking about the 15 naira charge when you do transfers in excess of 10,000 naira. So it could escalate to as much as 1 billion naira.
So can I break it down to 10,000 and not pay?
You have to break it down to 9,999 naira, because once it hits 10,000, you pay the 15 naira charge.
So I asked if I have different bank accounts in different banks.
Yes.
And I transfer my money to my account.
In another bank.
Yeah.
For now, you pay the stamp duty.
It's my account.
Yes. So for now, the law says if you have within the same bank, so your BVN is used to track that transaction. But once it crosses one financial institution
to another,
the stamp duty is triggered. So you have to pay.
Is that not discouraging people to have different bank accounts in different banks?
Well, it's individual's choices at the end of the day, whether to maintain multiple bank accounts or to maintain a single account.
Okay, how does this tax law protect low-income earners? I know you've mentioned it a little bit, and small businesses. Example, the market woman who is probably listening there, the POS vendor, or what gain is it to them?
Okay, so for starts, this tax act as passed is heavily pro-poor. It's been said over, but that's actually the reality of the act. So what happens is that if you earn income, right, so the narrative out there, which also needs a bit of corrections, is that if you earn 800,000 and below, you don't pay taxes. But the words of the act is that your taxable income, when it is 800,000 and below. So there's difference between your taxable income and your gross income. So the law provides for certain reliefs beyond just your income. So you could earn above 800,000, for instance. Your contributions to PENCOM is allowed as a relief. Your contribution to NHIS, to National Housing Fund, interest you pay on owner-occupied properties, insurance premium you take for yourself and your spouse, all those reliefs are deducted from your income. So at the end of it all, if your income is not above 800,000, after all the deductions, you still will not pay any tax. So it's not your 800,000 that you earn. It's your taxable income. So reliefs are adjusted for before you arrive at a taxable income. It's like a net figure.
Net income, yeah.
Yes, it's like a net figure. So it gives a lot of protection for low-income earners. In fact, for some of us in professional discourse, we are envisaging that some states will take a hit, you know, where the level of income is not as robust as in states which has some bit of a ban activities. They might see a relative decline in tax generation, because what the government has told us over and over is that the idea is that they want to tax the fruit and not the seed. So government is interested in seeing that the citizens are able to access public services and have better well-being. And also don't forget, VAT has been exempted on a lot of basic items, so you don't pay VAT on food, basic food, medicals, pharmaceuticals, schools, and all the rest. So what government is doing is to provide the relief. Government understands that the citizens are facing a lot of burdens, so they are trying to provide a lot of succor.
Especially in education, health.
In education and health.
And rent.
And rent. There's also a rent relief. So it's also introduced with the new act. So the law is saying that if you pay rent, if you are a tenant, you are allowed 20% of the rent that you have paid as additional relief to the reliefs that the...
No. Explain that.
Okay, so
because some
this
of
is
us
how it
are
works.
paying huge rent, and
Yes.
that is cutting deep into our income.
This is how it works. There's a relief, but there's a caveat to it. So it's pegged at 500,000 naira. So you have a relief of 20% of the rent you've paid, but subject to a maximum of 500,000. What this means in essence is that if your rent is, say, 3 million naira per annum, 20% of that would be 600,000. But the law has capped what the relief you can enjoy to 500,000. So yes, so that there's a cap to it. However, if your rent is 1 million, 20% of that will give you 200,000 relief.
How do you guess it?
The relief is the actual rent you have paid. So the law says that you should provide evidence, or rather, the tax authority may require you to provide evidence of that rent that you have paid.
So no. So what you're saying, for those who are paying rent, who are listening, they must be interested. So if I'm paying 2 million, for example, I don't know, I'm talking about monthly, of course, which if you multiply...
Annually. The rent is computed, grossed up annually. Yes. You pay PAYE on a monthly basis, but the computation is always done on an annual basis.
So whoever is watching should try to aggregate it annually. And who do you go to?
You could, there are a lot of, the tax reform committee has an app on their website. You could go, you could check out what you are due to pay.
What's their website?
I would need to be very sure, but you can put it on Google, the Tax Reform Committee. They have a website, and then they have a computation.
What about the issue of tax certificate?
Okay, so tax certificate, which I'm sure you mean tax clearance certificate.
Okay, yeah.
Okay, so tax clearance certificate is the certification of your compliance, basic level of compliance with tax. So in Nigeria, we operate what we call self-assessment regime. So the law envisages that you will come forward on your own and voluntarily declare your income.
You know why I'm asking that?
Yes.
Because we're discussing the other day, and I think I was made to understand that it's the company that you work for that should cater for that.
Oh, no. Okay, so I think if I get your question correctly, for salary earners, yes, your company, your organization you work for will file your returns for you. So at the end of the month, for instance, they deduct your pay, your tax for the month, and pay to government. And at the end of the year, they are expected to file to government how much they have deducted from you, how much your salary was. But you as an individual, the law expects that you also do your own filing. Don't forget, we have salary earners who have other sources of income. So when you have such arrangement where you have multiple income sources, you are expected to go to the tax authority and declare your income from all sources. So your salary income is just one line of income for you at the end of the day. So you have a property that you put on rent. The rent is another line of income. So you have a shop or a supermarket somewhere, is another line of income. So you aggregate all those incomes, and then you are able to determine how much you actually are supposed to pay at the end of the year.
You know what, Doctor? I think the government should do more enlightening.
Yes, I think so too.
They should do more enlightening.
Well, government is doing a lot, but there's also room for more.
You can never have enough.
You can
Before
never
I let
have
you
enough.
run away,
Yes.
it's been interesting. Let me take you back to this. So market women, basically, because I mean their income is low, they will not be paying any tax.
Well, for now, the market women are categorized
POS
under
vendors,
yes, they are
small
categorized as
business.
the informal sector.
Okay.
So what the Act envisages is that there's going to be what we call presumptive tax, because it will be difficult to actually get accurate figure, accurate information. Record keeping are not really there. So the tax in each state, I also need to mention that in Nigeria, individuals are taxed based on their state of residence. So it is the state authority that determines how much tax you're going to pay and where you pay and all the assessments. So what we have now is that a lot of states are domesticating the Tax Act as it is. Okay. So the states will come up with the structures and the modalities for how people in the informal sector are going to be taxed. Okay. And also don't forget, we also talk about principle of economy when we are talking about taxation. The tax authority always want to ask themselves, how much am I going to spend in order to get revenue from this low income? Yeah. So you see the economy doesn't work out at the end of the day.
Do I need to go
that's not the target.
Okay, just quickly. Clarify implementation, what is called implementation timelines, compliance expectations, and then the broader, it's big, but just encapsulate it, broader implications of, I mean, government has said economic growth, revenue generation, citizens' welfare. Can you just briefly...
so in terms of the implementation, the Act became active on the 1st of January 2026. So we are already at the implementation stage. So this period is actually more or less a transitional period. Okay. So there are a lot of transitional issues that we're going to be encountering as we move on. But the Act is in force from the 1st of January 2026. So in terms of the fiscal aspects that you've mentioned, of course, when efficiency comes into the tax environment, more people comes into the tax net, more businesses are captured. Definitely, we've said that over time, revenue will grow, and government will be able to meet the obligations.
We'll leave it there. Dr. Ben Enamudu, Chartered Institute of Taxation of Nigeria Chairman. Thank you so much for your time and explaining these little tiny details. Government have to do more.
Thank you very much.
Thank you so much
for being here.
Thank you for having me.